Hi, good afternoon, everyone. My name is Raphael Karuaihe, and today we are having yet another series of Derivatives 101 with the theme Location Differentials. Let me just start by, first of all, taking a recap of what we covered last time, last presentation, which was on the concept of basis. And we said that basis was basically just the difference between your going futures price and the going cash price in the spot market, and that was the difference. That is, in other words, the difference between those two would then be referred to as basis. And location differential is actually basically a similar concept, although we specify it as what we call spatial basis. And I will just cover that in more detail. Now, if we were to just conceptualize the definition of location differentials, which I would henceforth call it LD for location differential, I would say it's spatial basis between the reference location and any other location, which I would call here location X. Now, what do we mean by reference location? You would recall that when you trade futures contracts or on the JSE, the price that it settles at is actually a price for a specific reference point. And in this case, you would know, you would recall that we always refer to Randfontein. So when you trade on our screen and then you see that, for example, maize closed at 1,950, that is actually the maize price today for a futures contract. Could be next month's contract or December contract, but for the location of Randfontein. That is a reference point. So in other words, now if you are seated somewhere else which is not Randfontein, then there would essentially be that spatial basis. If you are quoting from Bloemfontein or from anywhere else, then your price cannot be the same as the price at Randfontein. And that difference, which is essentially the difference between your futures settlement price and your spot price at Bloemfontein, in that case, that difference then becomes your location differential. We also give it a further definition where we say, then why should there be a differential between the two? Simply because if the farmer or the miller, for example, is situated in Bloemfontein, but he bought his maize with a Randfontein reference point, he then has to transport his maize from that point to where he is actually milling. And so, in other words, that difference that we normally talk about is essentially your transportation cost between your reference point and your location where you are situated at. Just to reaffirm again what I mentioned here, that normally Randfontein is just on the west end of Johannesburg, and that is actually the point that we reference all our derivative products that we are trading on the Johannesburg Stock Exchange. Of course, with the exception of a different contract of wheat, which we call the Cape wheat, which has got a PAL reference point in the Cape, in the Western Cape. Other than that, all other deliverable products are referencing Johannesburg, or the reef as we call it, Randfontein. Yeah, and that's why if you are somewhere else here or in Uppington or whatever, there must be that differential, and that is basically what we refer to as location differential. Now, what we do just to also assist the market as the JSE is every year before the season kicks off, we try to determine for all the registered delivery points across the country. We then try to determine by consolidating information on transport costs, rail costs, and so on. Then we do publish these location differentials based to the best of our ability. Of course, the setback there is that we only do the publication once a year and we review it once a year, while the actual transportation dynamics are actually varying every moment. For example, your basic fuel price may be changing every month or every second month or so. So you would see that the location differential in essence is just a guide to help the market. But then of course it may vary from the actual from time to time. All right, so location differential as a cost of transportation. So I was just like I just alluded to in my introduction earlier. So we say that location differential is essentially a function of your road rate. And of course, not everything gets transported through road. So we also have got a component of rail for those destinations where rail is still functioning well. Now you find that at times we do have some bottlenecks, and in some instances, even though the rail link is there, we don't have those kind of services. But of course, although it's improving now, we have seen quite more and more rail services coming on board, and of course with the intention to try and take more trucks off the road and get more cargo on the rail as an initiative by government. So hopefully in future we'll see the rail component becoming more substantial. Then of course what we have then is a railroad ratio. In other words, if you are a specific location, we request the storage operator at that location to give us an indication of all his cargo, what was transported by rail, what was transported by road, and because essentially those two components have got different rates, so that we then do a weighted average to actually arrive at our location differential. Then we know, say for example, if your rail cargo was only 20% for the season, then we then take 20% of contribution from rail rate and 80% contribution from the road rate to be able to determine then our location differential. And in our model, of course, how do we determine our road rate? That is the formula that we use, and we have published that, and we've sent it out in market notices extensively, trying to explain how we arrive at these numbers, where it's distance from the reference point to that particular location. RLF, as you see here, stands for the return load factor. In other words, it varies between 1 and 2, and all we are saying is when you talk of distance, it's actually from point A to B, but sometimes we say when the transporters are calculating their rates, they consider the fact that their truck returns empty. And in that case, then if you have got an empty return load factor, or empty return load, then your factor would be 2. But if it's fully loaded, then we would have a 1. So based on that information, we'll be able to then calculate. Your RPK is then your rent per kilometer, and then your payload is actually now what your truck can carry. Is it a 30-ton truck, or can it carry 34 tons? Depending on the different models, they do actually carry different loads. Although we have then standardized that, where we say for maize, we only take a benchmark 30 tons, and then for sunflower seeds, which is slightly, you can actually put in more for the same volume, it's actually slightly higher than that. So those are the kind of parameters that we use to then ultimately put in as inputs to determine our location differential. Then of course our rail rate is provided by TFR, your Transrate Freight and Rail. Your railroad ratios are provided by the storage operators, and then ultimately this is your weighted average, which is a combination of your rail and road based on the different weights or percentages of rail contribution versus road contribution. So it's, in essence, this is what we already do to try and help the market have an idea of a location differential at a particular point. And we do have, for example, for maize, we do have about 205 registered delivery points. And so for each delivery point, we have then to publish a location differential as an indicative measure of transportation cost to that point. Again, like I said, some participants do disagree with the approach, saying that either it has to be reviewed every month, or which would then put it won't be effective, especially for like our option riders and so on who have to hedge and or do a delta hedge for that matter. That it would be very difficult for them to plan ahead. If they don't know ahead of time what your transportation cost, then it's gonna be like. So for that reason, we have a flat rate which is only reviewable every cycle or every cropping season. Yeah. So, but of course, in the real life, people could provide or make an offer at a different rate other than the location differential. Based on that formula that I indicated in the previous slide, we actually then publish what we call the rand per kilometers based on the distance ranges. And this is again with the help of the transporters in the industry. We were able to say that for low distances like 0 to 25 kilometers, because the truck is really not going to go that far, it's not cost effective to actually charge use it for that short distance. They would prefer long distances. So, and you'd see then, of course, this is almost like a sliding scale, which starts from most expensive for shorter distances, and then much lesser for the long hauls distances. And as you can see, for the shorter distances, almost 3 times more than for the longer distances in terms of the kilometer rates, basically, that the trucks would be charging. And then we also do a survey. You see the last one here, it's Western Cape to the Reef, which is to Johannesburg area. If we were to use our model that we are calculating, we would have, this number would have been above 1,000 rand per ton to transport maize from here down to the Western Cape, for example. But then we saw that the mathematical model may be unrealistic in that sense. And we then do a survey of transporters to see how much do you charge if somebody is asking you to quote to transport their grain from here to down to the Western Cape, or up from there, bringing up wheat or so to the reef. And every year we then do a survey, and the number that we stand at now, based on the survey that we do, is 580 rand per ton. For that, and that is actually the farthest distance from Randfontein, basically, that we manage. And we take the Western Cape as actually just one point, but although of course it's a number of delivery points, but with respect to the reference Randfontein point, we regard it as one point with one single charge, basically. And of course, what we also do is we try to do a sliding scale of the return load factors, where we say for distances less than 300 kilometers, it is in many instances very unlikely that the truck will come back with a return load. So we assume an empty return load in that case, and then your return load factor is 2. Whereas all the way, say, to 600 or and above, we then assume a return load factor of around 1, meaning that almost for longer distances, you always almost come back with a return load from that side. And of course, truckers or transporters prefer this because if you come back with a return load, then your rate per kilometer will then be cheaper, simply because you can then cover your leg back. I'm not sure whether this sliding scale is the correct one. I see some anomalies here, but it's just for you to have an idea how we then arrive at the return load factor. What you see here is actually just an extract from what we publish on our website. And this is an extract for the maize, both yellow and white location differentials for the current season, which is your 2014-2015 cropping season. And I just took an extract as far as I could fit it on the slide here, just to show you, for example, Africa scope. And then what we say is that the location differential, based on our calculation and based on this formula you see above here, gave us a location differential of 274. So in other words, a buyer who buys maize, but he wants to deliver it at Africa's COP, or to pick it up at Africa's COP, would then have to discount the published closing price of maize, which was referenced at Randfontein, and then discount it with this 274 rand, because that's the money he would need then to transport this is his additional fee that he would need to transport to go pick up his maize, basically, from that location. So this is why how it is actually discounted. And we also give additional information, such as the grain storage facility at Africa's COP belongs to AFG. In this case, AFG is short for AFGRI, which is and then so we've got the different silo operators names in those codes there. And of course, you would see the different figures here, depending on the registered delivery point. Now, of course, there are much more than the 205 that I mentioned, but we require for whoever wants to have his delivery point recognized as a JSE delivery point, then he has to apply for that recognition. We have certain stringent requirements that need to be met for that operator to then be able to be recognized as a JSE delivery point. And we also do inspections from time to time to see that the hygiene, the quality of the grade quality of the commodity adhere to the specifications that are laid out. Yeah, so that is what we do. Now, I just simply gave you the definition of location differential as it is. We said that if your futures price closed at, say, 2,000 Rand, and your location differential for Africa's COP is at 274, like it was shown there in the previous slide, then your cash price that the buyer is willing to pay to settle to the seller would then be your 2,000 Rand minus your location differential would then be your cash price. That is now the cash in the pocket of the seller of the commodity. But then because of the fact of what I indicated earlier, that sometimes you find that the participants say that the location differential figures, which is only published once a year, is very static and may not reflect fundamentals from time to time in the real economy. What we then did is we allowed for whoever is the owner of the stock maize at a particular location to say he could actually ask for a premium. In other words, where he say, even though the maize price closed at 2,000 for argument's sake, I want 30 Rand per ton over and above the closing price as a premium. Because remember also that some locations are strategically positioned. They could be along a main highway, for example, so that everyone actually would prefer to pick up his maize from that strategic location. Now, if there are too many people who demand the same maize from the same location, then we would allow for this premium that the highest bidder would then get the maize at that particular location. And in that case also, it allows the owner of the maize to attract additional income over and above your futures closing price minus the differential at that location. He could actually then earn an additional premium. And this is what I'm introducing here. So recall that we said that your location differential was simply the difference between your futures settlement price minus the spot price at location X. This means that your spot price at location X is your futures price minus the location differential. So normally this is a formula we use to determine the cash price at location X, because we know the settlement price on the screen at the JSE, and we have published the location differentials for all the registered delivery points, in this case at delivery point X. Then we would then be able to determine the cash price at location X or delivery point X. Now, with the introduction of the premium or the spot basis premium, this equation changes slightly, where we say that the spot price at X would be that settlement price, the futures price, minus your location differential at X, but then plus the premium that is actually also bid. So we do have a separate screen where market participants, buyers and sellers, can say, even though we know the settlement price was 2,000, I'm willing to pay an extra 20 Rand per ton over that price to be able to secure my maize at location X. And this, as you can see, is additional income that would then go straight to the pocket of the farmer. And that was the way to try and also diffuse and please some of the market participants who felt that the location differential was too static and it was not reflective of realities or fundamentals on the ground. So your special then basis is then basically that net between your location differential and your premium that you can attract at a particular location, in this case location X. Yeah, and here this is a separate window that is also available on your front end, on Neutron front end, for those that are trading the commodities market. And you see that you can actually, especially if you are a seller, you can actually upload your certificate here if you are now ready to deliver your maize. And like in this case, it tells you that the silo owner is TWK, the commodity is soya, the silo certificate is that number there, and the location, which I was calling location X, now has a name. It's Panbelt, as you can see there, and it's a commodity, soya commodity of South African origin. The member, that is now your broker who is now brokering this deal, is that KMCM, and the client who is the owner, who has got title to this certificate, is that code that you see here, and we see it's 100 tons of soya, and we know that, it's 100 tons of soya. So in other words, it's 2 contracts basically, because one contract is 50 tons, so 100 tons would then be two contracts. And storage is already paid, because this is also a precondition that we are not going to process here until it's up to date. Of course, ignore the dates because this is just an extract from an old thing that I just wanted to show you. And this is really just how you upload your certificate to make it ready for delivery, and also to be able then to request a premium over and above the closing futures price. And so this one is now your spot basis window, and you see different, these are the different commodities, mainly yellow and white maize, different storage providers, and these are the different locations. So this is an extract that I took, I think, a day before yesterday, or was it yesterday, from our trading front end, from Neutron. And it shows you exactly that, for example, at location Ati, there was a willing buyer who was saying, I'm willing to pay 5 Rand over and above any settlement of futures price on that particular day. And then you find a location like Pan, belonging to Avgri, was attracting 200 Rand. And this is now 200 Rand per ton over and above the 1,900 or the 2,000 Rand, which is now the futures closing price. So it's a very attractive premium, as you can see here, that a willing buyer is trying to secure maize, white maize in this case, at that particular location. Same for Driefontein, we see those numbers there. So in a sense, this has become quite active, and we have seen quite a number of commodity or grain owners, especially farmers and traders, benefiting from this facility, which was introduced not more than a year ago, or just slightly around a year ago. So this was just to show you how we actually arrive or end up arriving at the final spatial basis, which originally was just your location differential, but since we introduced premiums, that number actually shrunk from the published location differential figure, because the seller of the commodity is actually able to attract an additional income as well through this window here. I've got here just a simple example, and let's go back to, I see here I took R0 as an example. Okay, here is R0, as you can see here. And the location differential for maize at this delivery point, as you can see here, is 244, right? This is now the LD. And then on this spot basis window, let's see if we can locate R0 somewhere here. I don't know whether, yes. You see R0 here was attracting 200 Rand. So there was a willing buyer at 200 Rand as an additional premium. So that is the information I'm using in this example here. So you see here that the location differential is 244. The premium that the buyer is willing to pay is 200 Rand per ton. So therefore the price, the final price or the cash price in the pocket of the seller then would be your futures price minus your location differential, but then plus the premium as an additional income to the seller. And you can see that this is almost netting off. It's just 44 extra that is being deducted from here to arrive at a good number, which otherwise would have been 1,938 minus 244, and now it's actually just 44 Rand, which is deducted from there, and which is a good income for the farmer in this case at that particular location. In short, this is my story about location differential and how they fit in the bigger picture, as well as the new functionality of spot basis premium that we have introduced to try and also lessen the location differentials. It's an ongoing debate. We will keep on fine-tuning and as we continue to publish the location differentials and fine-tuning our methodology that we are using to reflect reality as close as possible. I thank you.